where to put your money in these markets that are very volatile. Kian Soon, Chief Executive Officer and Fund Manager of Astral Asset Management, joins us this morning. Kian Soon, thanks for coming on. I mean, how are you navigating these equity markets at this point in time? I mean, it's sort of hard to get a grip on exactly where the direction is heading. Have we hit bottom, do you think, or is there more to come?
I think we are seeing a lot of panic in the markets now. There's panic buying in the supermarkets, and definitely there's panic selling across a lot of stock markets. This is a repeat of, the other kind of stock crisis we have seen, in the global financial crisis, when the dot-com bubble exploded, or, 1987 Asian stock crisis. I mean, this is happening right as the virus is becoming more severe. I think the market is, trading at a very volatile situations day to day, as is reacting to the bad news of how the virus has spread, initially from Asia to the rest of the world. And now the market is also adjusting depending on what kind of measures the central banks have put in place together with the governments of the world who is putting in place fiscal packages.
Right.
So
speaking of
in terms of what...
Go ahead.
Yeah, in terms of what the market is reacting, I don't think it's hit the bottom, because it will really depends on how this virus plays out.
All right. Well, if we were going to use that as a marker to judge exactly where the market was heading or is going to head, a number of financial practitioners are looking at the curve in terms of the number of infections and when that does peak. I mean, if we were to sort of slice and dice those curves across the globe, and now, of course, coronavirus has hit, some 140 countries and territories. Looking at China, I mean, the markets are up there today, right? Shanghai Composite and Shenzhen. China's reported 13 new infection cases, which is dramatically lower than where we were, say, 1, 2, 3, or 4 weeks ago. If that was a good indicator, do you think that China is a good place to put your money after, as it appears that they might have at least gone through the worst part of this coronavirus spread?
Generally, in terms of geography, locations, we are very positive about China, as well as Northeast Asia, and the cities that were initially affected, like Hong Kong, and as well as in Southeast Asia, Singapore. These areas or regions of countries have shown that they have managed to, contain the virus in a significant way, and I believe the recovery will start right from these places as well. If you look at, how the market is reacting, the market is pricing in that China will get up to speed, and recovery will start, and you will actually lead the pack in terms of, off the racetrack first.
The thing is, in these places that you just indicated, whilst the number of cases is falling or the rate of growth is ebbing somewhat, we do have a number of restrictions in some of these places. I mean, Hong Kong, for instance, has just slapped on travel restrictions. We do have lockdown scenarios happening in China. Isn't that going to curtail economic activity for some time, and hence, therefore, impact corporate profits? And then, of course, the numbers that we're seeing in terms of valuations and dividend yields, we can't really rely on at this point in time.
I think in terms of the recovery, we prefer big countries like China, which itself has a huge domestic consumption market. It's not very dependent on trade, neither is it solely dependent on tourism, which constitute a small part of its overall economy. Even if China is going to be locked down, with the likes of cities and Hong Kong, the companies that is serving domestic consumptions in China will recover, as they are first off the track. When people get back to work, when production starts. This is one of the light that is shining across, and we like big cities, big countries that could have a robust domestic consumption to support its own economy. As for the other cities, I think the travel bans, the containment will continue for 3 to 6 months, and it's really about how you manage this crisis day to day as the situation evolves.
Right. Okay. So if we're going to play the China story, is it better to play it through Hong Kong, which is a much more international open market with some of the shares that are dual traded in Shanghai and Hong Kong, or to buy the domestic A shares, where we do know, of course, the MSCI is in the process, of course, of increasing its weightings?
I think whether you put your money in Hong Kong or China depends on a couple of factors. First to highlight is Hong Kong is actually trading at very attractive valuations of price to earnings ratios below 10, as well as price to book ratio around 1. So this is a very attractive valuations with respect to valuations in China, which tends to be a bit richer. In terms of which market to pick, it all depends on whether you would like to have a USD exposure or whether you have sufficient renminbi quota that allows you to trade in the A-shares market too. It's really up to the independent financial institutions that decides which market will be the best. But currently what we are seeing in both markets is their companies are definitely on the recovering track. The earnings in the first quarter will be atrocious, but we are like to see some light in the end of the tunnel as the workers start getting back to work, people start, their consumption, resume their consumption patterns, and that would definitely come, first relative to the rest of the world.
Okay, Kian Soon, thank you. Point taken, and great to see you and speak to you today. That was Kian Soon, CEO of Astral Asset Management, talking to us about, of course, the impact of stock markets and the appetite and sentiment across the board. And it's interesting to note that, as the number of infections in China continues to fall, or the rate falls, that the sentiment across the market is improving.
Yeah, good to know.
Good to know.
But the volatility in the market's still not for the faint-hearted.
Bye, folks. That's going to do it for today's show. We'll see you again tomorrow. Thanks for being with us today.
Bye-bye.
Bye.
Let me